everybody, welcome to the Liberated Stock Trader Trading Academy free stock market training workshop. My name is Barry Moore. I'm the founder of the LiberatedStockTrader.com, and welcome to you all. Today we'll be discussing the stock chart, how to set up your stock chart, deciding what bars to use, looking at the trend and drawing trend lines most importantly. Some housekeeping points just before we start. So all of you on the call today are starting off on mute. If you have any questions, please click raise your hand and type your question. I'll then be able to unmute you and you can ask your question directly to me. We should have this as an interactive session, so if you do have any questions, please feel free to ask. If you're having any trouble with your microphone, you are able to dial in on a free phone number. The numbers are available for the US, Canada and most European countries. If you're outside these areas, then you're going to have to use your PC and microphone. This webinar is also being recorded for the benefit of those unable to attend. The contents also may be used in other ways in the future, for example for podcasts. If you don't want to be recorded, you're advised to leave the session now. However, no attendee list or any personal details will actually be recorded. So I hope that clarifies some of the housekeeping points. So today is really the first session we're having for all of our free members. We have thousands of members now, and I enjoy interacting with everyone via mail or Facebook or Twitter or however people want to engage. Here you can see I'm sharing, hopefully you can see that. I'm sharing the website, LiberatedStockTrader.com, and some of the material that I'll share today is actually available when you log in. In the login prompt you can see here the member content area, and for our free members and also our gold members who are the purchasers of the Liberated Stock Trader Pro training can also access all the free member content as well. But here you can see the free Trading Academy all content, and within there you can see essentially the lessons structured into the first grade through to 10th grade, and here in Chart Reading Made Easy, 5th grade, you will see some of the articles that highlight how to draw trend lines and how to set up your chart, etc. But what we're going to do today is have an interactive session. I'll show you live how we can actually begin to do that. So drawing trend lines is one of the most basic and fundamental skills of a technical analyst, and the ability to draw believable and actionable trend lines is absolutely. What I'm going to do now is jump over to my tool of choice for charting, which, as you probably guessed by now if you've read any of the articles, is Telecharts. And for today's example, I'm going to use Apple Incorporated. Now it's a stock that's really the darling of the stock market, certainly the darling of the NASDAQ and the darling of anyone who's bought it really over the last 10 years or so if you have a buy and hold strategy. And what I'm going to do here is, you can see this stock chart covers more or less 10 years, but it's not showing the last 3 years. So what I wanted to do was go through and highlight from before the dot-com bubble burst and start drawing some trend lines here, so we can see that the most basic form of data, which is the price data that we see in the chart, how people neglect how important the price lines actually are. So we're going to go through here, we're going to have a look at some of the events here and then go through it into an up-to-date chart and more of a drill down. The chart I'm sharing today here, you can see is a weekly chart. You can see that up here, and that enables us to have a long-term view. So one thing also I wanted to discuss today before we start drawing some trend lines is looking at the price pattern itself. Now, or the actual price bars themselves. So here you can see I'm using a standard bar layout, and a key thing here is the scale you use. So you can see here Apple has moved considerably over the last 10 years, to say the least. It's a real dream stock, performing a feat that Microsoft performed in the 80s and 90s. Apple's really been doing that over the last 10 years or so. So one of the things is, one of the basics of charting is when you look at a chart, and especially a chart that has large percentage price swings, you really want to be viewing that chart on a logarithmic scale. And logarithmic and arithmetic scaling is available on most free and premium stock market packages. So for example here, if I look at an arithmetic scale, you can see it's very difficult for me to see the percentage swings on a long-term basis, right? Here you can see, according to this chart in arithmetic scale, from 2001 through to beginning 2004, this stock practically didn't move, right? But the actual reality is it did move considerably during that period, but you can't see it on an arithmetic scale. Arithmetic will take standard price units and plot them across this axis here. So you can see here it starts at $0, $10, $20, $30, and on a big moving price chart, that's practically useless. And if we shift over into a logarithmic scale, the key difference here is each of these grid lines, these horizontal grid lines, the difference between those is represented by this point here, the 40.82%. So what you have here is an ununiform price scale, but uniform units of measurement between the two. So if the stock price moves from here at 633 through to here at 891, you know that that's a 40% price move. That gives us all sorts of benefits when we're drawing trend lines and also using trend lines to do, let's say, future risk reward analysis in terms of where we want to set the targets on the stock that we buy. And that's a little bit of a more advanced topic, but suffice to say, logarithmic is the scale that I use. Another key point here is the type of bar to use. Now, I know when I started stock trading, that was not one of the considerations, but as my skills improved over the years, I started to realize that there were certain advantages with different types of bar. Warden's telechart here enables me to have a standard bar, an open bar, and candlestick choice. I use candlesticks today because I find it much more informative, and having knowledge of candlesticks and the psychology behind candlesticks, that gives me some more insight, a different level of insight into the potential short-term price moves indicated by the candlestick patterns. And what I can do here is I can plot down days in a different colour to up days. You can see, so up days on the candles are green and down days are red. So when I do that, we can see now that I have a much more pictorially advanced chart that I can start to look at. As we start, let's jump over now into drawing some trend lines, and let's have a look at some basic chart setup. So here in the main price window, you can see that I have price plotted, of course. I don't have any indicators on price yet because today we're going to just be focusing on trend lines. But one important thing to note is usually on a main chart you would have a volume plotted underneath. Obviously, volume is kind of the engine and shows price demand, the supply and demand situation for a particular stock in a particular day or week. And a handy thing to do would be to plot a moving average, for example, over volume. So sometimes too many volume bars, it's hard to see a trend forming. And here, when we have a moving average of volume, you can start to see that. So the average volume over the past, this is for 5 and it's a weekly chart, so over the past 5 weeks is plotted in this area, right? So you can see when volume is shooting above it's the moving average of itself, you can see there's a surge in volume, an average volume, and it enables us to see a little bit easier how volume grows or declines over time. Here in the middle window I've got